What is an investment? An investment involves putting money or capital into an asset with the goal of generating income and increasing the value over time. Now, there are many different types of investments, such as stocks, known as shares or equities. Bonds, essentially you are lending money. Mutual funds is a pool of investors' money invested in several companies. ETFs, or exchange-traded funds, they are similar to mutual funds that track the market index. CDs, or certificates of deposits, you give to banks through a predetermined amount of time and earn interest. Retirement plans, which is an investment account with a certain tax benefit. Options is a more complex way of purchasing stocks. Derivatives, which is a financial instrument that drives its own value over another asset. Commodities are primary raw materials or agricultural products that can be bought and sold, such as gold, silver, energy, livestock, or agricultural products. All of these investments are ways of increasing your net worth. Real estate stands out from all of these investments because real estate not only builds wealth, it builds a legacy. I'm going to tell you why real estate will build a future. Let's get started. Hello, my name is Herbert McGurk. I'm a real estate agent for social impact in Beverly Hills, California. Thank you for watching this video, and please subscribe, comment, or like. Real estate is the top of the list of any long-term investor, and one of the safest ones you can make. Real estate rarely goes down and continually increases in value. Yet there are a few short periods of fluctuation, but real estate always recovers and constantly increases in value. If you want an investment that will be valuable for generations to come, buy homes, fourplexes, apartment buildings, commercial property, and land. Buy real estate. People are always going to need a place to live, do business, or grow something. The demand for real estate only increases as our population grows. Houses increase 3 to 6% annually, while doubling their value of homes every 10 years. You can accelerate your property value by making improvements in your real estate investments, such as remodeling, providing upgrade technology, interior improvements, or just a coat of paint. This will add additional value to your property immediately. Governments really like real estate investors and provide generous tax benefits in many ways. As a real estate investor, you are providing housing for the population and increasing the value of the land. The tax benefits are usually in the form of deductions from depreciation, mortgage payments, cost of improvements and services, utilities, travel costs, and property taxes. Check your accountant for additional deductions and the type of deductions that are appropriate for you. The most important component of real estate is your investment has passive income. You receive passive income by buying residential or commercial property and leasing it out to tenants. You're able to pass on many expenses onto the tenants, which will provide you an income. You receive income 24/7 while sleeping as long as you want. The longer you hold real estate, the more investment grows. Leasing property does take a responsibility. Make sure you understand the leasing laws in your area. At some point, the more properties you purchase, it's important to understand the property management. You can manage properties on your own, or at some point you may want a property management company to take care of your investments. You'll know when you get to this point, which will allow you to spend more time looking for more investments rather than managing your properties. Once you have purchased a real estate investment, it's recommended that you keep informed on the constant changing market. The real estate market is cyclical and influenced by an ever-changing economy. There are several indicators you can keep an eye on, such as interest rates, inflation, home sales in your area, home building, consumer spending, employment figures, and whether it's a seller or buyer's market. When prices go down, you're able to purchase more properties. And by holding on to these properties, you know it will increase in value over time. Whether you purchase a single-family home, apartment building, or commercial property, you want to make sure there is reasonable income potential after expenses. Banks are always willing to lend you money when you have sufficient income. In fact, they may offer you preferred interest rates when a property shows that it's performing well. In fact, when interest rates go down, you can always refinance at a better rate. By making a few improvements on your property, you can go to another bank and get a higher loan. Pay off the other loan and pull out cash to purchase more properties. One of the biggest rewards for buying investment property is the tenants are paying your expenses, mortgage, and effectively compensating and maintaining your property. The beautiful thing about real estate is that you can see it, touch it, and receive rewards from owning it. And in case of an emergency, you can always sell it or live in it. You can protect your asset by insuring from property damage, lost items, and legal fees, and let the tenant cover the cost. Real estate investments are easily transferable to your heirs. You can build wealth and a legacy at the same time. In California, there is no state-level estate or inheritance tax. Therefore, your heirs can inherit your legacy tax-free. If your heirs keep the income-producing property over decades, they can basically live off the income while investing in other properties or businesses. Real estate is diversified. You can invest in single-family homes, multi-family units, apartment buildings, short-term rentals, commercial properties, office or retail, hotels, industrial, and agricultural properties. Each of these properties serve different purposes and needs. Be sure to research whatever type of real estate you intend to purchase. It's always better to start small and build from your experience. Real estate is relatively easy to liquidate. It's not like stocks where you can sell it immediately. Rather, it could take most investors up to 60 to 90 days to sell a house, and commercial properties can take a little bit longer. It's all depending. If you need cash, you can always refinance and take out a mortgage. I hope the information provided is helpful. When you are ready to start investing in real estate, take some time to make a plan. Many people have a side hustle to raise the money to purchase their first property. It may take a few years to save the money for your first property, so get yourself set up with the capital, debt, equity, property management, and learn what you can about your market. Start with one property at a time and work your way up. Don't wait for a crash. Buy the property when it's ready for you. There are many ways to go about purchasing real estate, and this video was meant to give you reasons for investing in real estate. The more you learn about real estate, the more knowledge you will have. Sometimes the biggest obstacle is no money or no credit. Therefore, the more you know can make you an asset, and people may invest in you. You can make more money from what people don't see. Thank you for watching this video. My name is Herbert McGurk. I'm a real estate agent for Social Impact. I give 10% of my commission to a charity of your choice in your name for every transaction we complete. Feel free to comment, share, or like, and I'll see you on my next video.